A few days ago, Donald Trump shocked the world by suddenly announcing tariffs against Canada, Mexico, and China. As soon as he dropped the bomb, the market collapsed and even Bitcoin plummeted. People started saying that Trump had gone crazy for wanting to impose these taxes on neighboring countries. Then both Canada and Mexico retaliated by imposing tariffs on the US. In response, Canada announced a 25% tariff on US goods worth $15 billion. But they couldn't hold out for long. The situation took a turn. Under pressure, they ended up giving in and promised to send troops to their borders to ensure that no one entered the United States illegally. That's when Donald Trump announced that he was suspending the tariffs. The markets recovered, and everything seemed to return to normal. However, here's the detail that keeps everyone on edge. Trump didn't actually cancel the tariffs. He just delayed them for 30 days, meaning they could come back at any moment. We know that many people are worried and fear that when the tariffs return, the prices of what we buy will skyrocket. But we want you to know that this isn't always the case. If you're someone who pays attention to where to invest your money and tries to understand this mess, let us tell you the full story. We are in what's called a trade war. It's not just a fight over import taxes. It's a war that affects the entire economy and reminds us of similar situations in the past. But wait, because behind this battle there's something even bigger: the future of the US dollar and the possibility of something that has been talked about before, known as Plaza Accord 2.0. And what does that mean? Well, it could change the value of all your investments. Imagine that on the global stage there's a four-way chess match going on. You've probably noticed that in this game, the United States came out winning the trade battle against Mexico and Canada. To reinforce its position, it is now sending more agents to the border to curb organized crime and drug trafficking. And you might ask, how do you know who wins a trade war? Well, it's simpler than it seems. You measure how much a country depends on trade with another. For example, Canada's exports to the US account for 22% of its GDP, which is basically the sum of everything the country produces. For Mexico, its exports represent 35% of its GDP. In contrast, US exports to Canada only make up 5% of US total income and 1.2% for Mexico. This tells us that Canada and Mexico rely much more on the US than the US depends on them. Now, you may have seen alarmist headlines claiming that tariffs cause inflation, meaning they make money lose value and goods become more expensive. But according to economists like Milton Friedman, one of the most renowned economists of all time, the only entity capable of creating inflation is the government, because it's the only one that can print money at will. Consumers, producers, unions, foreign companies, and even oil companies, none of them can create inflation. That's why what really causes inflation is excessive spending and printing too much money, nothing more. Today, thanks to figures like Elon Musk and his Department of Dodge, which meticulously analyze public spending and cut it down, we are seeing a very interesting shift in government management. These initiatives help reduce the size of the government and eliminate wasteful or even corrupt spending. Trump follows this philosophy. When tariffs are applied strategically, they encourage companies to manufacture more products domestically instead of importing them. This creates more jobs and improves local production, which can lead to lower prices for some goods. At the same time, if the government reduces spending in inefficient or corrupt areas, it won't need to collect as much in taxes. That means lower public spending allows the government to depend less on tax revenue, easing the tax burden for everyone. Together, these two measures could lead to both lower product prices and reduced taxes for individuals. After the tariffs imposed by former President Trump in 2018, there were 3 specific cases where these taxes helped create more jobs. The logic was simple. By forcing companies to relocate part of their production to the US, the manufacturing of solar panels, washing machines, and steel increased. This made their prices drop and, in turn, generated more revenue for the government. This experiment was considered a success, and today, we see how tariffs are strategically used to achieve specific goals. However, there is another theory that explains the deeper reason behind these tariffs: the Triffin dilemma. This concept is named after Belgian-American economist Robert Triffin, who in the 1960s identified a major problem. Let's explain it simply. If China sells oil to India, they will most likely use US dollars for the transaction, even though neither country is American. This happens because the dollar is the world's reserve currency. It's the one everyone accepts and trusts. Now, here's the issue that Triffin discovered. He realized that for the world to have enough dollars for all these transactions, the US must distribute dollars worldwide. And how does it do that? By importing more than it exports. That is, buying more goods from other countries than it sells. This is called having a trade deficit. Why does the US have to buy more than it sells? Because if the US exported more than it imported, the dollars would return home and there wouldn't be enough left in the world for other countries to conduct business. So for global trade to function, the US has to spend more than it earns by purchasing foreign goods and sending dollars abroad. But here's the catch. If the US continues to run trade deficits for too long, other countries might start to lose trust. They might think, hey, if the US is printing so many dollars and spending more than it has, won't the dollar lose its value? This distrust is dangerous because if countries stop believing in the dollar, they could seek alternative currencies like the euro or the Chinese yuan. And if that happens, the dollar would lose its role as the world's reserve currency, dealing a massive blow to the US. Economy. What happens if other countries stop using the dollar? The first effect would be that the dollar loses value. Why? Because if there's less demand for dollars in global trade, its value will drop, just like when a once popular product suddenly loses interest. So furthermore, if other countries start using different currencies, the US would lose one of its biggest advantages, the ability to print dollars almost without limit. Currently, since the dollar is the world's reserve currency, the US can afford trade deficits and excessive spending because it knows the world will continue to use and accept dollars. But if that changes, the US would have to be much more cautious with its economy as it could no longer simply print its way out of problems. And here comes the big issue. US debt. The government needs money to cover expenses, so it issues treasury bonds, which are basically promises to repay money with interest in the future. Many countries, like China and Japan, buy these bonds because they trust the US. Ye will pay them back, and because they earn interest. But if investors start losing faith in the US economy, bond prices could drop, forcing the government to offer higher interest rates to attract buyers. This increases debt costs and could hurt the economy. To counter this, tariffs and the idea of a new Plaza Accord 2.0 come into play, an economic strategy to weaken the dollar and increase exports. Trump supports this, while Federal Reserve Chair Jerome Powell prefers stronger interest rates to fight inflation. In the end, the financial chessboard is being played on a global scale, and the outcome will determine the future of the US economy and the world.